Now, so far we have discussed microfinance institutions, its objectives, functions and structure. Now, the other topic which we have to discuss now, microfinance institutions, legal and regulatory framework. Now, the legal and regulatory framework which we have to discuss, and most of the institutions which are created according to the particular legislation. It may be created under Companies Act, it may be created under Societies Act, it may be created under the Cooperative Societies Act like. So, based on this, here we have to concentrate on the legal framework which is framed by the government and what type of regulations which are there. So, these are the two issues which we have to discuss now, legal and regulatory framework which is very much related to the microfinance institutions. Now, microfinance institutions, the financial these are the institutions which may be offering different services which we have already discussed. Microfinance institutions are offering the services like micro credit facilities. So, micro credit is the amount of credit which is sanctioned by the microfinance institutions to the people, it is less than 1 lakh rupees. So, whatever the money which is required, so the people will approach the financial institutions. Now, financial institutions will see the status of these groups and they can sanction the amount of loans to them. So, this is one product which is very much popular, and not only that the savings habit, microfinance institutions which also cultivating the saving habits out of the various group members. Now, the group members now they are in a position to know. So, how much to save, so in what ways we have to save like. Now, here whatever the money they are earning every day, out of that they must also try to go with some amount of savings. So, saving is nothing but the amount of income which is earned by the group or the member. Now, out of that whatever the expenses they incur, so the excess of the income over expenses, now the whatever the that surplus is there, that surplus must be saved and that surplus may be deposited into the various institutions. Now, when they do like this, the amount will be accumulated over a period of time. Now, with this amount they can also meet their requirements. So, the future requirements may be in the form of the different instruments they can purchase for the purpose of agriculture. Now, not only that, they may be planning to construct one small house. Now, these deposits may also use, or they want to provide the educational facilities to their children, or they want to go for the marriage of their children, or different social ceremonies if they want to organize. Now, these deposits are the savings which are very much useful to them. Now, every time it is not required to borrow the funds from the institutions. Now, they can also make use of their savings in the form of deposits. This they may deposit over a period of time. So, after that small amount may be accumulated like anything. Even Muhammad Yunus also started and educating the people how to save the money every day. So, every day the people must save 50 rupees or 100 rupees, that 50, 100 also accumulated like anything after 1 year or 2 years or 5 years or 10 years like. Now, that is the power of the savings. Now, the power of the savings must be educated by the different institutions to the poor, because they are not aware of this. Now, this is the another thing which we will call it as thrift or the thrift or savings. Now, this is the important service which they are rendering. Now, pension schemes also plays an important role. Now, we have a quotation like, if we are not going to save, now you must work till your death. This is the piteous thing in the life of any individual. If we are not saving, or if we have not started the saving concept now, or if we are not depositing, if you are not saving for your the last stage of your life, now it is very difficult to lead your life. And another important point also I want to share with you, if you may live up to 60 years, or your expected life may be 80 years, your expected life may be 90 years. Now, for this you must save more and more amount of money if the number of years of your life is increasing. That is also we must try to recognize as early as possible. Now, somebody what they will do, now they can earn and they can expend, but they forget about this the form of pension schemes and all. Now, they are not in a position to save it. So, after the 50 years or the 60 years or 55 years, they realize that, so I failed to save the money for the purpose of my retirement life. So, nobody is going to help you, it may be educated or uneducated, like they must try to go with for the different pension schemes which are there, and various institutions are offering the pension schemes to the public, and these pension schemes they must join, and so some of the amount they must invest in the form of these pension schemes, and your rest of the life will be taken care by these schemes. That is why pension schemes are very much popular today. Even the rural poor must also recognize the importance of these pension schemes and the products which are offered by these institutions. Now, they must buy these schemes like. Now, insurance services also playing an important role. Now, for example, the governments also offering different insurance schemes to the farmers, but most of the people they are not covered under this. Only few people may be covering, or maybe family may be covering if there may be a death of a family member, right. Now, in that case the government which is going to pay some 5 lakh rupees like. Anyhow, this 5 lakh rupees is also not sufficient to meet their future requirements. So, what is required? So, whatever the risk is involved in the life of the anybody, now they must go with the insurance products. So, these are the insurance products which the microfinance institutions are also offering to the rural poor. Now, the poor also they are purchasing the different insurance schemes. Now, the people which they are educating, and whenever they have the knowledge about this, now that is why the schemes are helping a lot. Now, not only that, in India the insurance is very less, its spread is very less, or the coverage is very less in percentage. Even in the case of health insurance, the coverage is very less, but this must be increased now. Now, the remittance services which we have already discussed. Now, come to the legal and regulatory framework. The banks and the microfinance institutions which have to comply with the various legal and regulatory requirements. The regulatory requirements are playing an important role, because why the regulatory requirements are required? These are required, these institutions may not going to cheat the people. For example, they may be depositing their amount of money, the small amount of money whatever they are saving. Now, with these institutions, now these institutions must be responsible to repay. Now, for that the regulatory framework which is very much required. Now, the knowledge of the requirements, operations, how these institutions must be operated, now what type of products they offer, what type of services they render to the customers. Now, these are specified by this regulatory framework. Now, that is why regulatory framework is playing an important role, and the services like microfinance institutions. So, whatever the institutions which they are offering the services like to the various depositories and all, there are different standards or norms which are there. They are also practicing these norms and standards. Now, based on by following these rules or regulations or the norms which are developed by the respective departments or the finance ministry, and according to that these institutions are working now. And these are the regulatory frameworks or the rules which are helping the people in the form of preventing the risk which is faced by the banks as well as the microfinance institutions. Now, not only that, these institutions must sustain over a period of time. Now, if these institutions may not be sustained, and if the people are not having the confidence over the financial institutions, now they are not going to approach these institutions, right. Now, we have already experienced different frauds in the system in India. For example, there is a Krushi bank fraud is there, Charminar bank fraud is there. Now, recently the Punjab and Maharashtra cooperative bank fraud, like that. There are different things which the people are experienced. Because of that, how we have to put the confidence over these institutions. Now, we have to put the confidence over these institutions because of the strong as well as stringent regulatory mechanism which is framed by the government of India to them. Now, the legal structure of the microfinance institutions here. Now, the societies, one type of the structure which is registered here is a society registered under the Societies Registration Act 1860. So, when a society is registered according to that, these societies must act according to the bylaws which are created by the Societies Registration Act 1860. Now, the companies registered under the section 3 of the Companies Act 1956. Now, companies may be working under section 25 or companies which are registered according to section 8 of the 2013 Companies Act. So, according to that, they must follow these rules and regulations which are framed. So, here an institution which is nothing but a body corporate. So, when a body which is corporated, now the members are involved. For example, if a society is there, now the society consists of members. Now, the members may be some top management is there, now board of directors, like that. Now, these are the people which they are working, and they are also operating these institutions. Now, in the case of in the form of rendering the different products and services to them. Now, here these are the institutions, which institutions comes under microfinance institutions and which are not comes under the microfinance institutions. So, microfinance institutions does not include the banking company, the cooperative society, now which is not registered under the microfinance institutions. So, many other institutions are there, but they are not comes under this and they are not lending. So, anyhow, here we have to concentrate on, there are the 5 important types of entities which are created according to the rules which are framed by the government. So, one type of institution which is there here is NGOs, non-government organizations. So, non-government organizations are also working under the microfinance. So, the microfinance institutions are there. Now, whatever the formal lending institutions are there, now these NGOs working in between a formal lending institution as well as the people or the clients or the customers. Now, they are the middlemen. Now, they are creating the awareness, they are educating the people. Now, they are engaged in the microfinance, now in the form of providing various types of information to them. Now, that is why this is one form of institution which is created called NGOs. So, many NGOs which are registered under the different names. Now, the NGOs will receive the funds from the various people or the institutions or maybe from the different governments. Now, they may use these funds to lend the people. Now, cooperatives also there. These are the cooperatives which are very much registered under the Cooperative Societies Act. Based on these Cooperative Societies Act, now they will act according to the rules and regulations as well as bylaws which are created under this, and they can also into microfinance activities. Now, section 25 companies which we have already discussed, the companies which are created under section 25 of the Companies Act 1956 or section 8 of the Companies Act 2013. So, these are the companies or the not for profit companies. So, they are working for the society and its betterment. Now, their main aim is not a profit, their aim is to provide the different services to the society. And another one is for profit non-banking finance companies. Non-banking finance companies are working for the profit, even though the non-banking finance companies, they are also lending in the small amount of money to the poor people. So, the another one is non-banking finance companies and microfinance institutions. The non-banking finance companies, now which is turned into a microfinance institution. Now, this form is also they can lend the amount of money or different products also they offer to the public. So, microfinance institutions based on the type of the registration. Now, the type of the registration, it may be NGO, it may be a company, now it may be a society, it may be a non-banking finance company. So, according to these acts, now these are created. Now, whatever the form of creation, now some of the institutions they may be working for profit, some of the institutions they are working for the purpose of not for profit, some of the institutions they want to educate. Now, these are the different institutions which are there. Ultimately, whatever the sections which may be applied or the acts may be applied, now they must follow these acts, and according to that they will lend the money to the rural poor and the people which may be comes under the poverty like. Now, not only that, whatever the different products and services which they are offering, these products and services must be offered according to the rules and regulations which are created by the different acts. So, these are the acts which are enacted through the parliament, and based on that, here we have to concentrate on the section 8 company, which companies are comes under section 8. Section 8 companies are the one person company. The one person company which is created according to section 8 of the Companies Act 2013. Now, this company is an association of persons, now including to be registered under the section 8 of the Companies Act 2013, now as the limited company. So, what these companies will do? These companies will promote the commerce, arts, science, sports, education, research, social welfare, religion and various charity activities. Now, these institutions will also protect the environment. So, how to protect the environment, and for that different activities they can also organize. So, these are all comes under this, and not only that, they can also play an important role in the form of its intention is to apply its profits, whatever the money or the profit which they can get. These are the profits which will be expended or the promote for the same objectives which we have discussed. Now, whatever the amount of profits they earn, these profits are reutilized for the purpose of promoting the various activities to the society, because of their objective is that they are not for the profit. So, whatever the profit they are earning, they can also redistribute into different activities. Now, not only that, these are the companies which are intended to prohibit the payment of any dividend to its members. Dividends are not paid to the members which are there into this type of company. Now, when these things which may be comes under a company which is registered, one person company which is registered under section 8 of the Companies Act 2013. So, these are the forms which are there. So, it may be a company which is registered according to Companies Act, a society which may be registered according to Societies Act. So, a non-banking finance company which may be registered according to a banking, like that. These are the institutions which are working, and each and every institution which comes under its own regulatory mechanism. There may not be any duplication of it. So, for example, if the non-banking companies are there, these are the non-banking companies which are regulated by the Reserve Bank of India. Now, the other institutions also comes under various regulatory bodies. So, we have checks and balances and regulatory mechanisms and regulatory bodies are there. These regulatory bodies will take care of the functioning of various financial institutions in India. Now, the regulatory framework which we have to consider here. So, what type of regulatory aspects which will comes under this microfinance institutions? Now, the regulatory aspects which will comes. Now, the Indian Contract Act 1872. So, whatever may be the contract agreement which is there, offer, acceptance. So, for example, if loan product is there, in the case of a loan product, the financial institution which they offer to the poor, and poor people may accept and they will take the loan. So, whatever the problem which may be arising related to this, now it will comes under the Indian Contract Act 1872 guidelines. So, this is the one of the important acts which may be very much useful, whatever the disputes which may be there. Now, these disputes which may be resolved based on this is the one important act which will comes. Now, second is Negotiable Instruments Act 1881. Now, we know that the negotiable instruments are, it may be a bill or it may be a check, it may be a DD, it may be whatever the instrument which the banking companies or the non-banking companies which they are using. For example, it may be a dishonor. Now, if the funds are not there in an account, so like that whatever the charges they will impose, like these are all comes under the Negotiable Instruments Act. So, Negotiable Instruments Act will take care of the problems or the issues which related to this. Now, we have two parties, one is a lending institution, another is a borrowing individual or a group of individuals. The problem or the conflict which is there in between these two. Now, the conflict which are related to the negotiable instruments which are solved according to this particular law. Here I am not going in detail, but what type of acts which are there, these acts which are very much useful to them now for the purpose of resolving their problems. Another one is the Cooperative Societies Act, now 1904. Now, according to that, if the cooperative societies which are working under the microfinance institutions tagline, now the problems related to this, now they can also solve according to this act. Now, Indian Partnership Act 1932, the problems which may be arised related to the partners or the group members, they may be registered under the Partnership Act. Now, the problems which are also resolved under this act. Now, the other act which is there, Reserve Bank of India Act 1934. Now, we know that the banking companies and non-banking companies which are regulated by the Reserve Bank of India. Now, the Reserve Bank of India which they have the powers to regulate. Now, not only that, they can also have the power to inspect, they can also have the power to make an inquiry, they can also send a committee or formulate a committee on whatever the problem which may be arising in a particular company or maybe a non-banking institution, they are looking to. Now, because of that, the banking system is very much stringent in India. Now, if you take in other countries, the banking system is not that much strong. So, Indian banking system is very much strong. Because of that, in the case of financial crisis 2008, now Indian banking system is not at all disturbed. Now, you can take 100 years of bank in US collapsed like anything because of those crises. So, our system is very much stringent system which is developed. Now, the rigorous rules, regulations which are there and they are enforcing, they are not entertaining any misconception or the misperception which is there or misconduct which is there in this particular industry. So, Banking Regulations Act 1949, now the Indian Companies Act 1956. Not only that, this Companies Act which is also improving like anything. Now, we are following the modified version of the Indian Companies Act 2013. Now, so many new guidelines which are there according to this 2013 Act. Now, the company which may be registered under section 8 of the Companies Act 2013. So, which may be also comes under this, they can also work according to the regulations which are imposed by this act. Now, Limitations Act 1963, now Consumer Protection Act 1986. Now, the Consumer Protection Act is very much powerful today. So, most of the people they are not having any idea. So, those who are in villages, like now we are not having that much of education. So, a company may be cheated, a product may be inferior product which is there, a company which is selling an inferior product. Now, you can also file a suit in the court of law, or otherwise you can also approach the consumer forums. Now, the district consumer forums are there, state consumer forums are there. If you approach the consumer forum, now it may be related to a problem related to a product, or problem related to a product or service. Now, this is the system which is there today. Now, we must make use of it. So, please try to open the mouth. If the mouth is open, now you can get the benefit. So, whatever the product may be inferior product which may be sell to you or may be offered to you, or the services which are not provided properly, now you can also approach the consumer forums like. So, consumer forums are very much strong today. Now, individual may be very weak. Now, a big company is there. Now, we will call it as multinational company. Even you can also fight with a multinational company now by approaching the consumer forums. Now, this is the day today. Now, it may be a individual, it may be group of individuals, it may be institution. Now, we can also fight with those corporates like. Now, that is why these stringent laws which are there today. Now, we will also have another important thing which is also created today, banking ombudsman scheme 2006. Now, if any problem which is there related to bank, now you can also approach to them. Now, not only there is no need to go there, now through online only you can send your problem. Now, immediately they will look into it, they will also direct within the very few number of hours. Now, that is the mechanism today we are experiencing because of the technological developments which are taking place over a period of time. Now, not only that, recovery of the debts due to the banks and financial institutions Act 1993. Now, whatever the amount of money which they may be recovered. Now, people today they are talking about the amount of non-performing assets, the banking companies and non-banking companies which they are facing today. Now, most of the economists and the people that they are talking about bad banks today, even in the recent budget also. Now, the finance minister talks about the bad bank. So, bad bank is a bank which they are going to create. So, it is not materialized today. So, in future they want to create a bank. Now, this bank will borrow all the non-performing assets of the banking and non-banking companies, and they are going to collect the money from the clients which they may be failed to repay. So, like that there are so many changes which are taking place. So, it may be through budget initiatives and parliament initiatives, so many acts which are framed by the legislative, the parliament. Now, this is about the highlights of the bill which is there under 2012 Microfinance Institutions Development and Regulation Bill 2012, which is initiated. Now, this bill which is we have to follow here. Now, statutory framework is developed, and regulation, the regulator is also playing an important role, registering the microfinance institutions. Now, microcredit, now the creation of the councils and the committees. Now, microfinance development fund, now the customer protection, offences and penalties. So, which we have already discussed, these are all comes under this bill 2012. Now, this 12 bill which also talks about the microfinance cells. So, are the committees which these are the committees which are working for the betterment of the better working of the microfinance institutions in India.